Good afternoon, and thank you all for joining us today. I am NIN Desai, and I will be your host. Before we dive into today's agenda, let's start with my background. I started my professional career at Merrill Lynch with our private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, internet and digital media, and others. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about 135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs means no exit for VCs, no return for LPs, and as a result, venture funds were on a decline. No new funding means less startup growth, low employment, and slow economic growth in general. Thus, on April 2, 2012, the Jumpstart Our Business Startup Act, or the Jobs Act, was introduced, which enables crowdfunding for all Americans. And that's how NIN Ventures came into existence. Crowdfunding is a practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. NIN Ventures is the first of its kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the Jobs Act and Rule 506C of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. NIN.VC has been the recipient of numerous awards, and I was awarded 2015 CE of the Year, Illinois, for innovation and contributions to the venture capital and private equity industry. And I was also recently awarded Private Equity Fund Manager of the Year to watch for 2017 by Corporate America. Moving on to the agenda for today's call, 2018 financial planning. But before we do that, let me start by saying that smart investment begins with knowing yourself. The key is to start early and invest for the long term based on your lifestyle choices, keeping in mind your risk appetite. The next step is to do your due diligence on all the investment options available, including their cost benefits. Diversification is key to any portfolio, and lastly, it's very important to monitor your portfolio. The market is flooded with investment vehicles, including stocks, bonds, mutual funds, IRA, real estate, and alternatives like venture capital, among others. Most people are short-sighted and have a three-dimensional portfolio which includes stocks, bonds, and money market. However, if you look at Harvard and Yale, they have a more diversified portfolio. For example, Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 33%, out of which 16.3% is venture capital compared to 13.7% in 2014 and just 10% the previous year. In general, most people have a three-dimensional portfolio. But if you look at Harvard and Yale, they take the long-term approach and invest in alternatives like venture capital. Most people are indirectly invested in a venture fund via a pension fund or any other investment vehicle. Crowdfunding or NIN.VC allows them to directly invest in a fund of their choice by eliminating the middleman, that is the pension fund, and their management fee, allowing them to generate higher returns. Since 2014, crowdfunding industry has grown from 16 billion to an estimated 34 billion in 2015 and is doubling or more every year. And according to the World Bank's estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding models, including rewards, donations, equity, debt, and lending. The two most popular types of crowdfunding are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business, sometimes in return for gifts or thank you notes. For equity crowdfunding, the backer receives a share of the company, usually in exchange of the money pledged. For NIN Ventures or NIN.VC, it would be limited partner interest in the NIN Ventures Technology QP fund. So what is the difference between direct investing in a company using the crowdfunding portal and a NIN.VC? Number one, diversification. As a fund, NIN Ventures Technology QP fund makes multiple investments in companies in different sectors, for example, 3D printing, cloud computing, education software, etc., during Series and B financing rounds. This strategy helps diversify the fund's portfolio, which is not the case when one invests in a company directly. Think of it as investing in a fund versus a stock. Low risk. Given the diverse portfolio, the fund reduces its risk. Whereas direct investing in a company exposes the investment to a higher degree of risk. An appropriate analogy would be to put all your eggs in one basket. A logical follow-up argument would then be, what if one makes multiple direct investments in companies of their choice using crowdfunding portal or investing in NIN.VC? Given 99% of startup fails, even if one invests in several companies via a crowdfunding portal, it becomes solely a numbers game, quantity over quality. On the other hand, the fund manager invests in an entrepreneur because entrepreneurs build companies and not the other way around. NIN.VC or any other VC not only provides adequate financing, but also lends domain expertise, network of partners to help companies with recruitment, PR, and marketing, and also help with a viable exit strategy. Professional management. Direct investment in a company requires expertise, due diligence, constant follow-up, and on monitoring. On the other hand, NIN.VC acts like a financial advisor and works for the investor in the fund's best interest. The fund also provides quarterly audited financial statements to the investors on the progress at the fund. Board representation. A $1,000 direct investment in a company using a crowdfunding portal does not give any individual enough rights, while a fund would take a board seat on all our investments. Thus, we're in the loop with the company management when it comes to keeping tabs on the progress of the company and are in a position to help or make suggestions on several occasions. And also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. Liquidity and exit. When one invests in NIN Ventures Technology QP fund, they are locked in with the fund and the management for a good 10 plus 2 years. Redemptions are extremely rare, and liquidity happens as and when the fund makes an exit in a company via an IPO or M&A transaction. On the other hand, direct investment in a company can be offered in the secondary market for transfer of ownership, but valuation, timing, and the choice of investment will dictate that transaction. The 2008 financial meltdown led to a liquidity crisis for everyone, companies, entrepreneurs, LPs, VCs. Fewer IPOs meant there were no exits, and as a result, there were no returns for LPs, and venture funds were on decline. No new funding, less startup funding, lower employment, slow economic growth. To avoid this, like I mentioned, the Jobs Act was introduced, which enables companies to crowdfund from accredited investors. However, there is a major flaw with that, and that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than that financing. They need guidance and domain expertise, help with PR and marketing, recruiting, viable exit strategies, more often follow-up financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class which normal population never had the knowledge or expertise to invest in. Like I mentioned, about 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solve all those issues. NIN.VC provides diversification. We take board seat on all our investments and lend the necessary support that an entrepreneur needs. like they would get at a traditional venture capital fund. And the most important part that investors care about is the ability to direct invest and enjoy direct returns, which is not the case with a traditional venture capital fund. Thus, NIN.VC has the best of both worlds. We are a hybrid between a traditional venture capital fund and a crowdfunding portal. NIN.VC is unique and first of its kind 25 million crowdfunded technology fund that invests in Series A and B rounds of disruptive technology companies and write checks anywhere from 1 to 5 million. And NIN.VC, it all starts with a disruptive technology. A disruptive technology is an innovation that changes an existing industry and creates value network, displacing an earlier technology or way of doing business, just like how we're changing the venture capital industry. We like to start with an entrepreneur. We invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world. An entrepreneur faces various challenges when it comes to taking the disruptive technologies to market. The few attributes that we look for in an entrepreneur are the ability to dream big, experience and expertise in the industry, ability to communicate with the team and outside, flexibility to adapt to a fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and working hard to accomplish their goals. As long as the company has certain ingredients like good management team, a disruptive technology, a viable product, and a revenue-generating strategy that form a basic foundation that leads to long-term success. We at NIN.VC like to invest in companies that are going to stand the test of time. So, who can invest in NIN.VC? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investments via a crowdfunding portal. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP fund. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total in excess of $5 million qualifies. There are multiple ways to verify if you're an accredited investor. For an individual, it's income, asset, and third-party verification. For an entity, it's asset and third-party verification. So what are the multiple ways of investing at NIN.VC? There are a wide range of options when it comes to investing in NIN Ventures Technology QP fund, using checking or savings accounts, defined benefits, self-directed IRAs, and digital currency. A defined benefit plan is a retirement fund that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing from a defined benefit plan are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is a sole proprietorship, LLC, LLP, PC, C Corp, or an S Corp. The investment growth is tax-deferred under the umbrella of the defined benefit plan, and the contributions might be significantly greater than that of the 401k profit-sharing plan to help increase the retirement savings account for the business owner. To invest in NIN Ventures using defined benefit plan, you must first sign up on NIN.VC, verify that you are an accredited investor. The next step is to establish a defined benefit plan with Robin Weingart and Associates or a provider of your choice. Once the plan is established and the contribution is calculated, you can complete the payment and subscription process on NIN.VC. We also let investors invest in our fund using retirement plans, for example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plans such as private placements and venture capital. Like any IRA investment, a self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows for true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in NIN Ventures using your self-directed IRA, you must first sign up on NIN.VC, verify you are an accredited investor. Next step is to establish an IRA account with interest groups, or a provider of your choice. Once the plan is established, you can complete the subscription and payment process on NIN.VC. Digital currencies, for example, Bitcoin, Litecoin, Dogecoin, are emerging as a new form of alternative payments and global currency. We at NIN Ventures understand the significance of this change and thus allow digital currency owners to attain liquidity in return for investments in NIN Ventures Technology QP funds. Now let's go through the investment process step by step and in detail. The very first step is to visit NIN.VC and sign up. Sign up is simple. First name, last name, email, password, and acknowledge you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested readings. You also get invited to attend our events and calls like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and a W-9 form on NIN.VC. The last step is payment, and it's as simple as selecting the payment method and the amount you wish to invest. Point out that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested reading on our website before making any investment decisions. Unfortunately, we do not have time for questions today, but feel free to reach us at contact@nin.vc or 312-953-0920 to schedule a one-on-one meeting or with any other questions or material requests. Have a wonderful day and happy investing.